Hi, Karl.
Hey Dale, how are you?
Good. What a pleasure to meet you, Karl. It's nice to meet new people and hear their story. Are you going to be sharing your screen?
Unfortunately, I'm having a little bit of technical difficulty here. My apologies for that, but we can definitely talk about some of the technicals and setups within some things that other guests may be looking at, some things that I'm looking at. And I do apologize for that.
Okay, well then what I'll do is when you're talking about something, let me grab the screen then and I'll, move it around
And I do
based upon
apologize once
what that's
again.
okay. No, this is live and
Yep.
we'll just make the adjustment. So, before we get to the markets, Karl, I'm always interested, and our viewers are, because everyone has a journey from point A to point B where they are now. Can you tell us a little bit about your first foray into the business? I know you're a chartered market technician. You have the CMT designation. Tell us about what happened prior to you getting involved in the industry and how you did become interested in technical analysis and trading, etc.
Wow, that's a long story, Dale. Sometimes you and I will chat in person. Now I'll give you the very
Give me the
quick.
cliff notes then. Cliff notes.
Not to sound corny, but as a kid, I was interested in the markets. And my father, he wasn't a big time investor, but he actually told me how to read and look at the stock charts and actually really look at prices within the Wall Street Journal. I was fascinated by it. I always
Cool.
liked, yeah, I liked math. And for those of them, the audience who are younger and everything, there is still a print edition of the Wall Street Journal still. Uh,
Yeah, I remember. I mean, people couldn't do anything without it in the first thing in the morning, and then a little later on, Investors Business Daily, was
yes.
a pretty good source too for guys like us that used to update our charts by hand. So, did you used to, before the internet became popular, update your charts manually?
Well, not really. I mean, I wrote, I kept more track at a younger age of stock prices. I wasn't a chart guy just yet. I was just
Okay,
fascinated about the prices, and back then that's when they traded in, in fractions, of course. And
right.
math was always something that I enjoyed. But as I got older, I still kind of followed the markets. Went off to college, and
Where'd you
then
go?
I went to Rutgers University.
Oh, okay,
I'm a
nice.
Jersey boy. I'm a
All
Jersey
right.
boy. I'm living in Pennsylvania now, but I, grew up in New Jersey, in central New Jersey.
Okay, do you know Joe Perry? He's also
I,
active in CMT.
I'm not personally, but I know who he is.
Okay, all right, go ahead.
And that's a small community, CMTs.
Yeah,
If you don't know them personally, you'd know the name as soon as
all
soon as
right.
uh,
Yeah,
as soon
he's
as
from
that. So
Jersey too. So I
yes, he
mean,
is.
yeah. Okay, go ahead, buddy.
So after my time at Rutgers, I went into the United States Marine Corps.
Hmm,
Spent
okay,
4 years in the Marine Corps, served, traveled the world. It was one of the most influential times of my life. And when I came home, I wasn't quite sure if I was going to get out. And it was a hard decision, Dale, quite frankly. I struggled with whether or not I was going to stay in or get out up until like the last month of me really EAS, my end of service. And I had, I was still relatively young, so I had grandiose ideas of what I was going to do. And,
yeah,
they never quite turn out the way you're going to be. Not anything bad, but one
yeah,
thing leads to another. So I came out and did some other jobs not related to the Marine Corps or even finance. But it just so happened that I had met up after a few years of being out of the Marine Corps. I had met up with an old friend of mine's father-in-law who had been in the industry forever. I remember him, when I grew up. So I had grown
okay,
up with her and her stepfather, and he just mentioned to me, Karl, why don't you really seriously look at becoming an advisor and getting into the industry? And I said, yeah. I go, it sounds great. And I always had that kind of part that I thought I would want to do that. So after that, I had taken that really seriously, Dale, and I started looking. And this is when you could still look for jobs in the newspaper. And
yeah,
I got a training program from American Express Financial Advisors before it became Ameriprise. It was one-time American Express Financial Advisors, and that's how I got my foot in the door, becoming an FA, starting on the retail side of the business.
How do you like cold calling? You're laughing, huh? How many dials a day, buddy?
Oh boy, I mean, if you weren't, you got to make a minimum of at least 200. Really, guys wanted to see 300, 400. You know, it was crazy the amount of time you spent on the phone, and you know, you wanted to call people and tell them about what you could do to help them financially.
Yeah. Like Louis De Palma in Taxi when he became a stockbroker for an episode. If you haven't seen it, you have to pull it up on YouTube. So you found out that really what you were was not a financial advisor, but a salesman collecting assets, correct?
Exactly. And that's not a discredit to anybody in the industry. And I came pretty quick, Dale, realized that I wanted to manage money. I wanted to help people, whether it was on the institutional side or even on the retail side. Or help advisors really know what to do with investing, you know, not just collecting assets and kind of reading a prospectus and thinking. And that's when I said, you know, I started really looking at different avenues, whether it was the CFA, the CMT, all made a lot of sense, but I kept getting drawn more and more. Again, that's the mathematical background to me, to the CMT part, the technicals of how things work, you know, because within fundamentals, it's great and they can tie the two together, but we could belabor why things are happening forever. When you got technicals and price momentum or weakness, it's there for you in black and white. The prices are the prices. Whether you want them to be the prices or not, that's what's going on in the marketplace.
Okay. All right. So a picture speaks 1,000 words, and if you like math, would you say that charting is a lot of geometry?
I think to a certain degree, absolutely. It is to a big degree, and then you have to like the math when you're looking at ratio analysis, you know, going into Fibonacci approach, and those out there who like to really get involved in Elliott wave, you know, Elliott wave is just a whole nother aspect of technical analysis. You can really just devote your whole analysis to Elliott wave, and gentlemen like Bob Prechter have, you know, and so that's kind of another way to go.
Okay, let me ask you this: when you were starting to gravitate towards technical analysis, and I don't know exactly the time frame, you know, I've been at it for a decade. So what I'm interested in is what or who did you gravitate towards? Did you have mentors yourself? I know your father introduced you to it. Did you learn from other people before you went to get your CMT? Someone kind of show you the way about what to look for technically? Or for me, I took a course at the Merck CME when I was a runner and cut my teeth on a book called Technical Analysis of Stock Trends by Edwards and McGee. That was very influential. I still use the stuff. It was kind of like the Bible of technical analysis back then. Were there any authors, books, or mentors that kind of showed you the way and opened your eyes to things?
You know, in fact, it wasn't that somebody per se took me underneath their wing. It was more reading the material. Edwards and McGee actually was always the technical analysis Bible, and in my opinion still is. So after reading that and looking to that, I thought that made tremendous amount of sense to me to get involved even more so. I will say that as I got involved more and more, and you become an affiliate member of the CMT, of the Market Technicians Association, that organization is really great, because what I was able to do is just, everybody is so helpful within that organization, Dale, quite frankly. I was asking questions, you know, you have your curriculum, but everybody is so willing to share their knowledge and to help you become the type of analyst that you want to become and try to help you. Nobody is ever like really trying to sell you on their dichotomy. At least in my experience, that was never the case. So, I mean, great organization from many facets, because
what a testimonial for CMT. Yeah, really, you could be a spokesperson for it. So you met people while you were getting involved in the course that
Correct.
they were just open and sharing and giving, and that is pretty cool in our industry. I know a lot of people believe in paying it forward to people that are new and help them avoid stepping on the landmines that they have. So, any people in particular that were influential to you in CMT at that time that we might know?
Well, somebody that you'll definitely know, and it wasn't he wasn't my mentor, but somebody that I followed in the news and really enjoyed following and listened to a lot was Ralph Alcampora.
Okay,
Everybody,
yeah,
yeah. I mean,
yeah,
I and I have met him at some of the CMT symposiums,
okay,
but I had always, like, if there was anything he was writing, anything that he was talking about, I would go and look at it because I liked the way that he approached things. This is very practical.
yeah,
Instead of trying for people, sometimes we can get lost in the analysis or paralysis through analysis, as
yeah.
a lot of technicians or any analyst would say. But the way that he was able to put things in very straightforward, matter of fact ways, and also a well-known name in the technical analysis industry, and I'm not sure if a lot of others, but Luis
John Murphy.
Yamada was and
Oh
is, and I've met
yeah,
him.
okay, yeah, yeah,
Yeah,
yeah,
fantastic. So these are people that have been doing it forever. So
yeah.
that's why, and they're not they're not people who are like writing books and just saying, oh, they've got skin in the game. They're doing it. They're working for companies. They're doing the research. So I would say those two
Okay,
individuals were people that I always wanted to read their information or just see what they were
okay.
saying in their interviews, etc.
All right. You know what detractors of Ralph used to call him?
What's that?
Ralph, I could make you poorer. Yeah.
I,
Ever hear that one? Huh?
honestly, I never have. I never
Okay.
have.
Anyway, so no matter how good you are, everyone has periods where things
Oh,
aren't working
sure.
out, and anyway, that's what I heard. Ralph, I could make you poorer. So
You know, you
anyway, Luis Yamada, known for the longer the base, the bigger the launch into space. So like
yes,
kind of like
yes.
bottoming saucer formations and things like that. So okay, buddy. Why don't we get to the markets? What instruments and what type of investing or trading do you do?
Well, I'm a big user of ETFs, and then
Okay.
if I want to get involved
I
in
love
the
ETFs. So do you trade Spider or you trade TBT, TLT for bonds, and
yes, so
what
SPY.
looks good to you in here?
Well, the U.S. dollar, I've liked and always followed that, and I DX.
UUP?
Yes, absolutely. That's the particular one I like to trade if and when I'm going to be involved in it. And you're obviously, it's not a pairs trade when you're getting involved in something of this. You're taking an approach really, inherently when you're doing forex, you're taking a dual side trade, a long and a short. The way I like the dollar trade and the way I like it, it's a basket of other currencies against that dollar. So
You don't
that's
throw
why.
market orders in on this, do you? Because I
Pardon
mean,
me?
look at it. I'm looking at a 1 hour. If you could see my screen on
Yes, I sure
UUP,
can.
and it looks like you have to make an appointment to get a trade off in UUP. So do you go in with limit orders? Because if you throw in a market order, the spread could be, I mean, what's the spread on an ETF like this?
You can, and that's why you want to use your market, excuse me, your limit orders when you're entering into the marketplace. You've got to be careful with some of these particular instruments. Even though I do like the ETFs, some of them do, like you said, trade by appointment, and you have to be a little bit more careful when you're trading those instruments. So yes, limit orders are definitely things that you're going to have to be using, and is what I use. And if I miss a trade because I'm not in where I want to be, I'm okay with that. I
Next.
definitely.
Yeah. All right. So I'm assuming you're constructive the dollar. Is there What are your technical reasons at this point for liking it? I'm starting to see some divergence. I know that it's a very sentiment-wise, really stacked up on the bullish side. Hard to find a dollar bear anywhere. What are you thinking in here, levels-wise and so forth?
Sure. So actually,
I'll put up the weekly for you, Karl.
yeah,
Here's the
if you
weekly.
could, I was going to say that it might
There you
be a better point here. So looking at this 2650 area here, looks like an interesting spot. And, some people will mark these down. Obviously, in Forex, you're trading with BIPs, but if you're looking at an ETF, it's a little bit different of an animal. Even though they're reflective of the price, you got to use a little bit more of a range within your price metrics. So it just seems that this 2650 area is a place of interest. And I like using the weekly. It depends again on your time frame, and you're going to hear that a lot. So I think ETF traders are a little bit different than the ones who are going to go straight and actually trade the currencies themselves. I think currency trading, you're going to do a lot shorter term. Not that you can't do shorter term with the ETFs, but you have the opportunity, I believe, to take a more of a longer term view, whether that means days or weeks or even a month. But as you can see how the dollar really bottomed out there in 2018. But to stay constructive though, Dale, we really want to see above 26 on the charts here on the weekly. We want to see 26. So I think we have this range of 2650, 26, even though we had been above that in the late part of 2016, early 2017. So you're going back a ways. But I think 2650 is really the area that needs to be broken out. So even though I am bullish on it, I think at the same time, you definitely want to, you don't want to get overly aggressive here. You really want to wait for the breakout. I'm big in not anticipating the breakout. I like to trade the breakouts. That's one of the things that I've always felt comfortable with.
That's a pearl.
Yeah.
Because you know how many times in my career I've anticipated one and then it doesn't happen, but I would go in and, a lot of traders or swing traders, position traders, listen to what Karl's saying because you try and get a little bit of an edge going into it and you don't know if you have a breakout till the candle or the bar closes. So, yeah, I've learned the hard way to, wait for things to confirm, although I still enter things because I like to hear the ice crack, sometimes anticipating them. But so 2650, if we say we rally to 2650 and can't maintain it and close back under 26, what ETF would you be looking at to possibly take advantage of, maybe a intermediate term correction?
You would definitely want to get the whatever your flavor might be for the inverse dollar ETF, whichever one you would prefer.
Okay. All right. Okay, so we have the dollar. You're constructive. You're waiting for a breakout over 2650. What would be your target should we get the 2650 breakout?
Not to get too crazy here, but I think we could see a good. Quite frankly, I think we could see a good couple of 3 points, maybe behind that. I don't know if we'll get to 30. That's kind of a really gigantic move. And if you look at it, we've only been there. Now. Yeah, but I think we could take out all those candles. If you're looking here at the monthly, I think we take out those. If we can sustain that 2650 and really get the push behind it, I think we get to 27. Obviously, we're talking small, but I think we can get a good run, and momentum would push this up to around 28 and 2850 are levels that I think are definitely within reason. And, that's always a big move to say, but I think that being that these are such levels that have been tested and really haven't been able to break through, I think that we can look at those higher levels.
So is it all based technical, your view on the dollar, or there's some fundamentals to back up your chart points that you believe in here on the dollar?
Sure. I mean, as a technical analyst, you hate to kind of, technically that's what I see. But as far as pragmatic, I mean, a lot of people knock the U.S. saying that, it's overheated or this and that, et cetera. I was recently at a conference a couple of weeks ago, and they were just talking about developed markets, emerging markets. And in some of these markets, even though they've had their rallies back and forth, have never gotten back to their 2007 highs, and their
Yeah.
currencies have not done that well. I just think overall that the U.S. is the best economy right now. I think the fundamentals do stand behind it. I'm not saying everything is great. And in fact, it's actually better, Dale, when everything isn't great, because when everything is great and nothing can get better, that's usually the end of any move, whether it's a dollar move, whether it's an economic move, because everybody's in the pool, nothing can get better, and you basically have run the course. So,
Okay.
and that's one of the things that
I
I
know
would
you're
say.
a technician. Does the Fed come into play when you think about the dollar? And do you think that the Fed, the way the market's pricing it, they went from tightening to being on hold, and they say they're data dependent, and now the market is thinking they might even ease in September. Do you think the Fed is really data dependent or S&P dependent, like Peter Bookvar says?
Huh. You know, I definitely think, because they're economists, they love the data, but I think they've become more reliant on what the markets are saying. That's me
Yeah.
personally.
Yeah.
I think you started to see a little bit of that with Greenspan, and that shift starting to happen with Greenspan, but then definitely with Bernanke, it did occur, and now with Powell, I do believe, and everybody could say no, no, no. I think they are always looking at the economical data, but the good thing is the markets are a good forecaster of what the economy is going to do for the most part, and therefore they're going to be looking at what the markets are doing. I think, they're not going to knee-jerk react, but I think they do look at what the overall broad-based market is doing, vis-a-vis the S&P 500.
All right, let's look at the overall market. So, yeah, I think the Fed would switch gears if we took out the December, January low. What's your view, since really the beginning of late last year, we really haven't gone anywhere. We've made marginal new highs in the indexes. What are you thinking in here? Is it right to sit long with this market, pare down, get defensive, or what sectors are you in favor of looking to buy on maybe weakness, correction, or something?
Sure, and Dale, if it wouldn't be too much to ask, if you want to just pull out the weekly here, just so we can take a
Sure,
look at it.
sure.
And
I like that you use telescopes and not just microscopes. So, okay, there you go. Would you like the NAS or the S&P or the Dow?
Let's use the S&P. It's a broad
All right.
base. I mean, I think it's the most relevant, quite frankly.
Okay.
And yes, like you said, we made marginal highs. We had that huge sell-off at the end of last year.
Yeah.
And quite frankly, technically speaking, it looked like everything was broken, and it did. And I was quite surprised that we didn't fall a lot farther than we did. And I thought we might have a hard time getting above that 2,600 level again.
Yeah.
And we pretty much didn't. We pretty much just went right back through it.
Yeah.
And continued.
Kind of an unusual recovery without any kind of correction along the way up. I know I tried shorting it at 61.8 back and 78.6 back. I'm still holding stuff underwater. What do you think now?
I think I'm optimistic. I am not overly aggressive. Like, I wouldn't definitely be margining it out. And if you have some big time winners, I wouldn't necessarily say sell them out. But if you're looking at individual names, you could keep your stop losses in if you want. We can debate that up and down, but just because you're up big in something doesn't mean that you have to sell it all. Or
Yeah. Are you a proponent of taking partials?
I am, yes. So it really depends upon how much skin in the game or how much exposure you have. So if your exposure, if you're a big time S&P guy, if you're buying the SPYs or what have you, and that's a large portion of your portfolio, or that's a large portion of the trading you do is behind the SPY, and you're up big like this, yeah, you want to pare some back. So it really depends on the type of investor. But just because something's run so much doesn't mean it can't keep going. It means it needs time to kind of really catch its breath a little bit.
All right, now sound like a technician, okay? The CNBC analysis, if it goes up, it could continue unless it sells off and holds support. If support's taken out, it'll go down unless it rebounds and heads to new highs. So, you ever hear that kind of analysis? All right, so
absolutely.
That's basically I'm strongly neutral. So with the S&Ps here, do you have any price levels like you had in the dollar for upside targets in the S&Ps? 3,000, is that? That's not far away.
No, I don't think that's too far away, quite frankly. I think if we can break out here and make newer highs, I think you got a pretty good stretch. I think we go another at least 10, maybe 20% higher before we see anything meaningful, quite frankly. I know that's a very, very bold call, but it's a call that I feel comfortable saying. Again, I'm not going to hold back. That's what I think on the S&Ps. If we could take out that make new highs and kind of get close, psychologically 3,000 is a level, but we just need to make new highs. 3,000 may play a little bit part of going back and forth. But if you break 3,000 in that area, just use that. I'm not going to be surprised for us to be, trading.
What you can tell people if we take out last week's low at 2,800?
We take out. I think that the main thing that you want to keep looking at is you want to then probably really not look much further, but longer term view, I would be more in the range of 2,750, 2,700 are the areas. I think you have to be very nimble to short this market. And the reason I say that, it seems like every time that this market, since 2009, the big recovery, anytime there was definitely money there was money to be made being short, but you have to really know what you're doing to short stocks, because your upside is capped and your downside.
There's ETFs though. There's bearish ETFs, right?
Correct. So it's depending. So I was kind of leaning a little bit more. I know that sometimes people want to with the SPYs, they just want to go out there and they just want to go short. But if you want to use the ETFs and do so, if you want to try to put on a trade after that 2,800 area, by all means you can definitely do that. But just know the type of risk that you're taking. So there is a better way to do it. Yes, Dale, absolutely. So if you're not going to go out and short the SPY or even get in the futures market, you can buy some of these bearish ETFs and look for a trade there, which is definitely a lot safer as opposed to going out and shorting either futures or shorting SPY.
All right. Why don't we transition over to, do you think it's a waste of money to buy insurance? Here's the VIX.
Everybody always talks about, I think it's a waste of money to try to trade the ETFs, the VIX ETFs. I think unless you're in it.
No, I understand that. There's big attrition on them. I know I've lost thousands doing it. So, as far as insurance, I mean, you have fire insurance on your house, right, Karl?
Oh, absolutely.
All right. Now you hope that you don't need it.
Right.
Is that a waste of money?
I think it has been. I think it has been in the markets to have insurance.
Well, it has been. And so is fire insurance until you have a fire.
Exactly.
Okay.
I'm more of the mind that I'd rather get out of the market or portion out or piece out of the market as opposed to
carry insurance all the time.
My portfolio.
Okay, so Karl, I have your Twitter up here. I see that you have like no website. What's it? Do you have a business model, or are you just trading your own account? What is it that you do, and why are you on social media?
Sure.
Go ahead.
So in the background, I've kind of transitioned out. I'm trading basically my own money these days. I used to work as a market strategist at many RIAs, but in the background there, Dale, and I'm going to get the site up on there. Vets Index is something near and dear to my heart. It's an index created based on all the companies that are doing great job hiring veterans. As a Marine Corps veteran, it's near and dear to my heart. So that card that you see in the background, everybody, that's part of the GT series. One of our principals has that card. He was gracious enough to put our logo up there on the card, the Vets Indexes. So I don't want everybody thinking that Vets Indexes isn't making all that tons of money right now. Hopefully, eventually we did. So I'm not really, right now, I love the markets. I trade the markets, have an affinity, always will try to help people in the markets. But what I'm doing now is totally different, Dale, as far as professionally. I'm with Vets Indexes. We'll get that site up, but if anyone wants to take a look, it's vetsindexes.com.
What a great cause, Karl. You know, this is the best part of the interview. Save the best for last. I love people that have a mission. What a great mission. You know, Blake Morrow was in the Marines too. You ought to say hello to he did some tours, and you know, I still, Karl, am in awe of the courage and the sacrifice of not just the vets but their families and what they go through, and how they really don't get the treatment they deserve at the VA. And I'm in awe because you know what? When I was at Northern Illinois University during the Vietnam era, I was so happy I had a high lottery number. Okay, so when I watch things like Band of Brothers and all of that, it's just unbelievable to me what guys like you, the commitment that you have to lay everything on the line for a country that at many times doesn't even appreciate what you do. So congratulations. I think this is your best trade, my trading warrior brother, right here.
Dale, that was gracious, and I'm very humbled by what you just said. So thank you.
So if I could ever help on Twitter by spreading the word about what you're doing, you just let me know and I'll promo it for you, buddy. And really great meeting you. And I hope you can help as many vets as possible make the adjustment to normal life. Like a lot of World War II guys never had any help and they just didn't talk about it. And then things pop up 40, 50 years later. So I love your cause, and anything that I could do to help you on social media, you just let me know. I'm there.
No, I truly appreciate it, Dale. That was gracious, and no, thank you for having me on today, especially since I'm really not in the game in a sense where I'm managing client money. I'm still managing my money. I'm still in the market, but I think that what you did here for me right now by just bringing up the whole Vets Indexes thing was fantastic, and I can't thank you enough.
All right, buddy. I'm so glad that we met, Karl, and keep in touch. And it's not just talk. I will take the action if I can help you. All right, buddy. And
certainly,
like it or not, you're my trading warrior brother now.
Absolutely, absolutely.
All
Dale,
right.
it's fantastic being on with you. Thank you.
Karl, great meeting you, and may your cause bring peace and support and joy to all the guys that made all the sacrifices while we're here worrying about making pips.
Thank you. Thank you very much.
All right, Karl. Everyone, that's a wrap. That's a wrap for Turnaround Tuesday. Good hunting the rest of the day. Join Blake and the guys in private chat. Remember, don't just count your pips, count your blessings. Support guys like Karl that are helping the people that came back with both emotional, mental, and physical injuries to get on with their lives. And we'll see everyone tomorrow. Adios, and thanks again, Karl.